Welcome back to Explain the Charts, your ultimate destination for in-depth market analysis and actionable trading insights. Today, August 6th, 2025, our spotlight is squarely on Bitcoin, identified by its ticker BTCUSD. We'll be analyzing its recent performance based on data available up to August 5th, 2025, showing it hovering around the significant $114,000 mark after experiencing a period of both explosive growth and more recent consolidation. We'll kick off our comprehensive analysis by thoroughly reviewing the most impactful current events and prevailing news narratives that are actively shaping Bitcoin's trajectory. Major financial news outlets consistently report Bitcoin's robust year-to-date return of 16.85% by early August 2025, undeniably showcasing its continued outperformance against more traditional asset classes like the S&P 500. This impressive year-to-date performance often acts as a magnet for new capital, creating a positive feedback loop for the asset's valuation. This impressive growth narrative is significantly fueled by a sustained increase in institutional adoption, powerfully evidenced by consistently rising Bitcoin ETF inflows, which signal growing mainstream acceptance and burgeoning investor confidence. A pivotal highlight from recent news was CNBC's report of Bitcoin smashing through the $120,000 psychological barrier to establish new all-time highs on July 14, 2025. A critical resistance turn support level we will meticulously examine on our charts. Further reinforcing the fundamentally bullish long-term outlook, the Bitcoin network recently achieved a new all-time high in its hash rate, signifying enhanced network security and indicating that miners are confidently expanding their operational capacities. However, the market isn't entirely without its immediate headwinds. CoinDesk recently indicated that Bitcoin was experiencing downward pressure on Tuesday, clearly suggesting that the $115,000 level is currently acting as a psychological and technical selling zone, prompting short-term caution. An intriguing, albeit speculative, development from James Howells, renowned for his lost Bitcoin fortune, involves his strategic pivot to launching a new DeFi token symbolically backed by the idea of his unrecoverable coins. However, astute market analysts widely caution this particular project is more akin to a memecoin lacking intrinsic value than a sound investment, underscoring speculative elements within the broader crypto ecosystem. Persistent concerns also plague the Bitcoin-backed loan offerings, which some outspoken critics vehemently label as ripoffs due to their conspicuously high 12 to 13% APRs and the inherent substantial risk of liquidation for unsuspecting borrowers, especially during periods of elevated market volatility. Finally, Berkshire Hathaway's substantial missed $850 million Bitcoin gains, a direct consequence of its deeply conservative investment strategy, starkly highlights the enduring skepticism from influential traditional investors like Warren Buffett, who consistently dismiss Bitcoin's intrinsic value, thereby representing a significant and enduring contrarian viewpoint in the established financial world. Transitioning seamlessly to the raw chart data, let's carefully observe the daily time frame to visually discern how these impactful news events are precisely reflected in Bitcoin's evolving price action. Over the expansive period from March 2024 through August 2025, the daily chart unequivocally depicts a robust and enduring bullish trend, unmistakably characterized by a consistent and compelling pattern of sequentially higher highs and higher lows, indicative of persistent and strong buying pressure across the market. The dramatic and explosive price surge that spectacularly culminated on July 14, 2025, where Bitcoin touched an unprecedented all-time high of $123,231, perfectly correlates with news reports of its successful breach of the $120,000 psychological mark, powerfully demonstrating how rapidly positive market sentiment can translate into monumental price appreciation. Following this historical peak, Bitcoin has experienced a noticeable and significant pullback, consolidating primarily around the $114,000 region, which precisely aligns with the recent reports from CoinDesk highlighting immediate selling pressure near $115,000. A newly formed, yet critical, support level has now firmly emerged around the key $100,000 to $105,000 zone. Notably, this area previously served as a formidable resistance barrier in late 2024 and early 2025, and its subsequent transformation into reliable support emphatically suggests a strong underlying foundation for future upside potential. Looking further back, the $90,000 to $92,000 range provided exceptionally robust support during earlier market corrections in November and December 2024, consistently acting as a dependable bounce zone for diligent buyers stepping into the market. An especially pivotal low was established around the $80,000 mark in early March 2025, where price experienced a powerful and swift reversal after a sharp correction, decisively marking it as a historical and significant demand zone that merits close attention. This overarching bullish structure, clearly visible on the daily chart, collectively reinforces the prevailing long-term optimism predominantly driven by increasing institutional interest and supportive macroeconomic tailwinds. The current market structure, with Bitcoin holding above its primary long-term moving averages, still leans bullish despite the recent correction. For discerning traders, a thorough understanding and constant monitoring of these broader support and resistance levels are absolutely crucial for strategically identifying optimal entry and exit points, particularly when formulating and managing longer-term investment positions. The current consolidation suggests a period of reevaluation, where traders are weighing the ongoing bullish fundamentals against the immediate downside risks and profit-taking activities. To attain a more granular and immediate understanding of the very recent price action, let's precisely zoom in on the 1-hour chart, specifically focusing our attention on the notably volatile period spanning from July 16th to July 19th, 2025. Immediately following the spectacular all-time high observed on the daily chart, which peaked at $123,231. The hourly chart distinctly reveals Bitcoin entering a clear and protracted consolidation phase, visibly struggling to sustain its prior upward momentum or establish any new immediate highs. The frequent appearance of numerous smaller candle bodies, consistently accompanied by elongated wicks extending in both upward and downward directions during this specific period, unequivocally indicates heightened market indecision and a fierce, ongoing struggle between aggressive buyers and persistent sellers, predominantly around the $118,000 to $119,000 price range. This pronounced indecisive price action, evident on the hourly time frame, served as a crucial early precursor to the broader daily pullback that unfolded, offering astute technical analysts vital advance warning signs of significantly weakening bullish conviction. The price encountered formidable resistance and struggled significantly to decisively breach and subsequently hold above the challenging $119,800 to $120,000 resistance level on multiple determined attempts, ultimately precipitating the subsequent and broader downtrend observed across all larger timeframes. During this particular trading range, initial, albeit temporary, support was identified around $117,000, a critical level that saw several brief bounces before eventually succumbing to overwhelming selling pressure, leading to further declines in the subsequent days. The accompanying and noticeable decrease in trading volume throughout this consolidation period further accentuated a palpable lack of strong directional conviction from major market participants, consequently rendering the eventual price breakdown more pronounced and serving as a key confirmation indicator for discerning traders. This focused hourly view powerfully illustrates how short-term charts can furnish crucial early signals of potential trend exhaustion or impending reversal points that might not yet be readily apparent or confirmed on larger, daily timeframe views, underscoring their importance for active trading. Observing candlestick patterns like dojis and spinning tops within this range highlighted the brewing uncertainty before the drop. Now, let's further narrow our analytical lens to the hyper-focused 15-minute timeframe, meticulously examining the immediate price behavior from July 31st to August 4th, 2025, for microtrends. On this extremely granular chart, Bitcoin is demonstrably seen oscillating within a remarkably tight and well-defined channel, primarily ranging between $112,000 and $116,000, which clearly confirms the immediate post-pullback consolidation and ongoing price compression. A critical short-term support level for persistent bulls is unequivocally evident at the $112,000 mark, a price point that has repeatedly witnessed strong buying interest and forceful price rejection on multiple distinct occasions, thus effectively preventing any further significant declines. Conversely, sellers consistently and actively step into the market around the $114,500 to $115,000 area, firmly establishing this zone as a persistent overhead resistance that eager buyers have evidently struggled to breach convincingly. The rapid yet confined fluctuations within this notably narrow price band present numerous enticing scalp trading opportunities for highly agile traders actively looking to capitalize on very minor, short-lived price swings and quick profits. Meticulously monitoring the trading volume on this precise time frame is absolutely essential, while the overall transaction count remains robust and consistent. The conspicuous absence of sharp volume spikes on price movements outside this defined range strongly indicates a prevailing lack of strong market conviction for either a significant bullish breakout or a bearish breakdown. This current delicate equilibrium strongly suggests that both the buying and selling factions are cautiously probing for any signs of weakness, without yet committing heavily or decisively in either direction, leading to a choppy market. For dedicated intraday traders, a decisive candle close above $115,000 or a definitive breakdown below $112,000, especially if robustly accompanied by a significant surge in trading volume, would serve as the primary and most reliable signal for establishing the next dominant short-term directional bias. Observing the repetitive formation of hammer and doji candles at these mini-support and resistance levels provides additional clues for potential short-term reversals within this range. Returning our analytical lens to the daily chart once more provides us with the crucial broader perspective necessary for formulating well-informed long-term outlooks and potential future movements for Bitcoin. For a strongly bullish long-term scenario to materialize and sustain itself, Bitcoin must not only reclaim but also maintain price action decisively above the $120,000 psychological and technical level, effectively transforming it into a new, solid, and reliable support foundation. The persistent trend of increasing institutional adoption and the consistent, growing Bitcoin ETF inflows collectively form a powerful and undeniable fundamental tailwind, strongly suggesting that progressively deeper pools of sophisticated capital are steadily entering the market, a historical precursor to significant and sustained price appreciation. If global macroeconomic uncertainties, particularly surrounding escalating inflation and unpredictable central bank interest rate policies, continue to persist or even intensify, Bitcoin's compelling narrative as a decentralized, digital gold, and a robust hedge against traditional currency devaluation is highly likely to be further powerfully reinforced, thereby attracting an even broader cohort of institutional and retail investors seeking safe haven assets. Under these significantly reinforced bullish conditions, a conservative yet entirely achievable long-term price target could realistically extend towards the compelling $130,000 to $150,000 range within the upcoming months, especially if additional positive news catalysts like new regulatory clarity, further major institutional endorsements, or widespread adoption announcements emerge, providing new legs to the rally. However, conversely, for a decidedly bearish short-term outlook, should the immediate and tentative support at $112,000 fail to resolutely hold under selling pressure, we would logically anticipate a swift retest of the stronger, established $105,000 support level and potentially even a deeper fall towards the critical psychological level of $100,000. A decisive and confirmed break below $100,000, particularly if accompanied by an exceptionally high trading volume, would almost certainly trigger further accelerated downside price action, with the next significant demand zone then becoming the $90,000 support, closely followed by the formidable $80,000 level last decisively seen in March 2025, signaling a more profound market correction. The prevailing concerns surrounding high-interest Bitcoin-backed loans, as prominently highlighted in the recent news, could potentially exacerbate selling pressure across the entire market if large-scale liquidations were to suddenly occur, thereby adding significant fuel to a potential downward spiral reminiscent of previous, sharper crypto market corrections. Therefore, any unexpected and adverse regulatory pronouncements or abrupt, unfavorable shifts in global financial policy would undoubtedly serve as potent bearish catalysts, compelling investors to swiftly reassess their risk exposure and potentially unwind positions in the volatile crypto market, marking key moments to observe. In conclusion, based on our in-depth analysis of both fundamental news and technical chart data, Bitcoin currently finds itself at a truly crucial juncture, artfully navigating a dynamic mix of powerful long-term bullish fundamentals and immediate short-term technical challenges. Recapping the absolutely critical price levels for traders and investors, immediate overhead resistance is prominently found at $115,000, with a more substantial and psychologically significant overhead barrier standing firmly at the $120,000 mark, representing a key breakthrough target. On the downside, crucial immediate support zones are identified at $112,000, followed by a robust and historically proven support range firmly situated between $100,000 and $105,000, offering multiple layers of defense. A sustained and confirmed breakout above $120,000 holds a moderately high likelihood, which we estimate at perhaps 65 to 70%, particularly if the positive institutional adoption trends continue their relentless ascent and persistent global inflation concerns actively drive increased demand for decentralized, uncorrelated assets. This optimistic bullish prediction would be powerfully reinforced and validated by a significant and discernible surge in trading volume accompanying the upward price movement, unequivocally indicating strong and committed buyer conviction and market participation. Conversely, a decisive and confirmed breakdown below $112,000, which could potentially lead to a sharp retest of the formidable $100,000 level, carries a moderate likelihood, currently estimated at 35 to 40%, especially if broader market risk-off sentiment unexpectedly prevails or unforeseen negative news events significantly impact the fragile crypto space. Conditions that would strongly reinforce such a bearish market move include a very notable and sustained increase in selling volume during downward price action, coupled with a conspicuous and concerning lack of strong buying response at identified intermediate support levels, signaling weakening demand. For both nimble short-term traders and patient long-term investors alike, consistently monitoring daily and hourly candle closes relative to these meticulously identified key price levels is absolutely paramount to accurately confirming any directional bias and consequently making precise and informed trading decisions. Furthermore, it is unequivocally vital to keep a vigilant eye on all upcoming macroeconomic data releases and critical central bank policy statements, as these external factors frequently exert a profound and often immediate influence on Bitcoin's perceived value proposition, overall market sentiment, and its future price trajectory. Remember to always trade responsibly and manage your risk effectively.